Welcome to this video. ZBCN coin is at a critical point. Will it reach its all-time high again? We will analyze this. Don't forget to subscribe and like, and please watch until the end to understand. Upon careful examination of the chart, it is possible to observe that price movements have been following a specific downward trend in recent periods. This downward trend is a structure that generally indicates that investors are under selling pressure, and that prices are heading toward lower levels in technical analysis. However, there is an important detail that should not be overlooked here. Every downward trend can also be a harbinger of a potential reversal formation, especially when the market has been under the pressure of a long-term downward trend and the price has been moving forward with increasingly lower peaks and troughs. A strong breakout may occur when this structure reaches its saturation point. This is precisely where opportunities arise. Upon careful examination of the current downward trend structure on the chart, positive signals indicating that the price is preparing to break out of this structure can be observed. The proximity to the upper band of the downward trend indicates that the price is now testing the boundaries of this structure and accumulating energy for a potential breakout. Such structures typically result in breakouts with high volume. If the price manages to break through the upper band of this downward trend with high volume, this will be a very strong signal that the momentum in the market has shifted upward. The breakout of the downward trend does not merely signify the overcoming of a technical resistance point, it also represents a significant shift in investor psychology. Because while selling pressure has been dominant throughout this structure, the breakout indicates that buyers have now taken control and the market direction has changed. This leads to investors regaining hope, becoming more confident in buying, and more liquidity entering the market. Therefore, the breakout of a downward trend can trigger not only a short-term but also a medium and long-term upward trend. Additionally, when a downtrend breaks, a retest is often seen after the breakout. This is when the price tests the trend line that previously acted as resistance, but now acts as support. This retest is a technically sound move and serves as confirmation before a new upward wave. If the price begins to rise again without losing momentum during this retest phase, this clearly demonstrates how firmly grounded the upward trend is and that the bull market has now entered the picture. The overall appearance of the chart and price behavior indicate that this downward trend is now very close to breaking and that the market is preparing for a significant upward breakout. Every time the price approaches the downward trend line, buying pressure increases, upward wicks form on the candlesticks, and volumes rise. All these details are clues that could signal a breakout in technical analysis. Therefore, it may only be a matter of time before the price breaks this trend. Therefore, it is crucial for investors to approach this technical structure with caution and monitor how the price behaves at the boundary of the downward trend. Because once this trend breaks, it will open a whole new chapter in the market, not only technically, but also psychologically. Factors such as new investors entering the market, increased trading volume, and the onset of FOMO could support the rise and potentially drive the price to unprecedented levels. In conclusion, while the descending trend structure on the chart may initially appear negative, detailed technical analysis indicates that this structure could actually open the door to a significant opportunity, especially if the price successfully breaks the descending trend with volume and continues its path after testing this level as support. A serious upward momentum could begin in the market. Investors who closely monitor such technical structures and plan their strategic decisions accordingly gain a significant advantage. When downward trends end, the subsequent upward movements are typically sharp and decisive. However, we cannot base our analysis solely on trends. Let us also examine other metrics. Stay tuned. When looking closely at the chart, a red line that the price has touched many times in the past and acts as a strong support area stands out clearly. This line is not just a random line that past price movements have touched, but rather corresponds to a technically significant support area. Because every time the price approaches this level, we see numerous examples of buyers entering the market, selling pressure decreasing, and upward reactions occurring. This indicates that this level now functions as a psychological and technical bottom level. Looking at recent price movements, the price has once again approached this important red line and responded by moving upward once more. This is a clear indication that market participants still view this level as a strong support. Moreover, it is not just the recent response. We have also observed in the past that the price has risen sharply from the same levels. This is referred to as confirmation of important levels in technical analysis. The more a support level is tested and holds, the more reliable it becomes. At this point, we can confidently say that this red line more than meets this criterion. The price turning back from this line multiple times not only indicates that the support level is holding, but also that buyers are ready to take positions at this level. This creates significant confidence in the market. From an investor's perspective, as long as the price does not fall below this level, the likelihood of a decline weakens, thereby strengthening positive expectations. If the price again reaches this level and shows an upward reversal, it could potentially signal the beginning of a new upward trend. For many technical analysts, such structures are points where buying opportunities are evaluated. This is because the risk-reward ratio is quite reasonable. While the stop level can be kept short, the upward potential is quite high. Such support zones are of vital importance, especially for the continuation of an upward trend. If the price gains strength from this support and moves upward again, it has the potential to test previous highs or even break above these levels to form new highs. Additionally, the absence of significant volume accumulation below this red line indicates that sellers are not sufficiently strong at this level. Therefore, even though the price approaches this line, the inability of sellers to exert sufficient pressure and the subsequent entry of buyers into the market indicate that this line continues to function as a strong support level. This suggests that the price may rebound from this level and target higher levels in the coming period. Upturns from such important support levels not only cause the price to rise in the short term, but can also lay the foundation for a long-term upward trend alongside the confidence that builds in the market. In other words, this red line is not just a short-term turning point, but may also function as a launch pad for the price to attempt new highs in the coming days. Additionally, the fact that the price has reversed multiple times from this level has turned this area into a reference point for investors. In technical analysis, this is referred to as important horizontal levels. These levels continue to function as areas where reactions can be expected, both in the past and in the future. Therefore, when the price returns to these levels, the likelihood of buying reactions occurring is always higher. In light of all this data, the fact that the price has returned to this red line and the possibility of initiating another upward movement from here presents an extremely positive and promising development. Because in line with past price behavior, reactions from this level have historically been precursors to strong upward movements. If history repeats itself once again, a price increase initiated from this point could lead to new highs. It is important to remember that historical levels in financial markets often repeat themselves. Upon careful examination of the chart, a fairly pronounced downward trend can be seen in the RSI indicator. This downward trend has been indicating for some time that price movements are progressing with weak momentum and that buyers' influence on the market remains limited. However, as this structure approaches its breaking point, it is now sending strong signals that a significant shift in market dynamics could be on the horizon. Leading indicators like the RSI tend to signal changes in direction before price movements, suggesting that a break in this trend could indicate not only a shift in the indicator, but also that the price is preparing to break its own downward trend. The downward trend line forming on the RSI actually reveals the general psychology of the market. It reflects that selling pressure has been steadily decreasing over time, but buyers have not yet entered the market in a strong way. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.